to another video on my YouTube channel. I'm starting a new series where I'll be analyzing the forex markets after uh, the New York session as I get time, and this will be a aftermarket analysis. So I'll just be doing the analysis after everything is done, just to show what happened over the day. Uh, and yeah, let me start with today. So today's date 17. Just let me see the higher time frames as always. Yeah, here we see that all this move downwards. This is what started all this move downwards. At this point, this was the what to say bearish order block, the first one that started this move. This one, then this is the one that this is one of the high and the bearish order block that pushed price going downwards. So yeah, so start of the day price was here. Let us analyze as if we don't see this candle. So yeah, it is at a premium level compared to price action. If we see price action from here, from this point, but if we see it from this point, it looks like somewhere just above the midpoint of this premium and discount range. Yeah, let us move on to the 4-hour time frame. Let's see if we see anything on the left side of the chart. There is this big sell side imbalance. That's one to count. That sell side imbalance. It doesn't tell us much about the price action today, but yeah, it's good to have it highlighted. I'll just remove it for now. Let me move on to the 1-hour time frame. So yeah, on the 1-hour time frame from the start of the London session, price was pretty much one-sided. It was as if at this point price started going downwards. There was this fluctuation in price occurred in the London session of 13th of March. Yeah, I guess it was to give traders a delivery into the fair value. So yeah, this would have been a good trade. Even if we were to short here, it was a good trade. Keeping the target, let's say we were to enter here, put our stop loss here and put our take profit at the sell side liquidity. Yeah, this was a very good trade. Yeah, after taking the sell side, let me just highlight the sell side and buy side liquidity. I'll hide these. This is going to be highlighted. buy side liquidity, and this is another buy side liquidity. This one also another buy side liquidity. This one also buy side liquidity, and this one also. So what happened today is that price took the sell side liquidity on 14th. It moved upwards, and on this is still 1 hour time frame. Let me move on to 15 minutes time frame. So yeah, what we see here is from this point onwards, it is a high, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, and then a higher high. So this was the point where a lot of buy side liquidity was taken, and then it took the sell side liquidity again, lower low, lower high, lower low, and lower high. After taking the sell side liquidity, we can assume that it would be going upwards. Price would start to move upwards, and this would be a shift in market structure, taking the sell side liquidity that was. Let's see first what the sell side liquidity was. Was it a daily sell side liquidity, or how many days? This is a low of how many days? So it is from 11th of March till 14th of March. So this was the lowest point of lowest point that price got to from 11th March till 14th March. So let's just see on the daily time frame. It is 12th on the low, 13th traded above it, and 14th it broke below it. So yeah, for now what we can expect is price going below after taking this buy side liquidity. At least price can trade up to the somewhere around this the body of this candle, or if it was to be not so bearish, it would trade around the break even of this candle. Break even, sorry, not break even, the high of this candle. So yeah, let's just see on the 15 minutes time frame. On the 15 minutes time frame, we see the sell side liquidity taken. Price formed a buy side imbalance right after it. It's better to highlight the first one after taking the sell side liquidity. Price traded right into it at 12:30. This would have been a better trade to take. Uh, this was also one of the fair value gaps. It was a smaller one, but yeah, uh, there would be not much risk if we were to buy somewhere around here into this fair value gap, but this would be an earlier one and a bigger one, I guess. To and notice how it is not being traded into just the candles are going below it, not the bodies. Let's see the high of this candle is 1.29274. Let's see the open of this candle 1.29274. So it's not going below it. Let's see the close of this candle 1.29274, and the open of this candle 1.29273. So it went below in this candle by zero point 0.1 pip. That was yeah, we could just ignore it and have this as a bullish indication after taking the sell side first indication that the price would go higher is that sell side liquidity was taken. After that, price found a buy side imbalance, which was traded into at the start of the London session. So we should have entered here, put our stop losses somewhere around, let's say around this candle, 8 pips. 8 pips would be a good stop loss here, yeah, 8 pips, and let's say take profit. This is one of the buy side liquidity. I would have taken my partial here, first partial here. Then the second one I would have taken here, or somewhere around here. I would have not kept it any other point about this one. So yeah, this was also a good trade for today. And yeah, the logic behind this trade is price took the sell side liquidity, found a buy side imbalance, and traded into it in the London session. So today's was a perfect setup. And yeah, we could have hold it for held it for take the buy side liquidity formed on 12th, but yeah, that is what is, and this would have been ultimately a 1 is to 8 risk to reward trade. But yeah, let's see for tomorrow if price forms any sell side imbalance around here, then we'll look to short it here, and yeah, I guess we'll take profit somewhere around here, trading into a buy side imbalance, or even here it could take this sell side liquidity, but I'm not sure if it would do that tomorrow or the day after tomorrow. I guess price would form a sell side imbalance somewhere around here. Uh, we'll take an entry here, then it would, the day the next day would look something like this. Let me project it. Yeah, starting from here, let's say it takes this side imbalance, side liquidity, side bars pattern. Yeah, okay, I'll leave it. Yeah, so what I'm hoping for is price takes this sell side liquidity, forms a sell side imbalance somewhere around here, uh, goes below, takes the sell side liquidity also, and trades into it around, trades into that sell side imbalance formed somewhere around here in the London session, tomorrow's London session. So yeah, I would imagine tomorrow's London session price to be somewhere around here, this price range, and I would short it here if it trades into the sell side imbalance here, and the take profit would be somewhere around here or here. Also, one last thing is, if we were to miss the entry in this buy side imbalance, the next good one would be obviously this one. But if we were to miss that also, so there is this buy side imbalance, just a little one forming here. So yeah, we would take a entry here. The stop loss would be a little bigger. I would put my stop loss somewhere around here and take profit as is. I would not change my take profit. Also in the London session, sorry, New York session price traded into this buy side imbalance, and it also was a good trade. I would have put my stop loss somewhere around 9 pips and take profit around 31 pips. This would have been a 1 to 4 trade. So yeah, both were good trades. Today was a very good trading day. Let's see what happens tomorrow. This was it. Hope you found something valuable. Thank you.